Thank you for joining us for this episode of Inside Legal ESG. We are thrilled to have with us today Paul Clements-Hunt, often referred to as the Godfather of Legal ESG. Throughout the conversation, I will let you know what he's doing now and how he came to that moniker. But for now, let's just say welcome to Paul.
Pamela, thanks. Absolute delight as ever to be joining you and Legal ESG, and looking forward to our conversation going ahead.
Wonderful. So I know you have probably told this story 1,000 times or more, but for those who don't know the pivotal role you played in developing the ESG acronym, tell us how that came to be.
Pamela, I was a United Nations official from 2000 to 2012, and I ran a partnership called UNEP, that's the United Nations Environment Programme Finance Initiative. But it was a real partnership between the UN with banks, asset managers, insurers, and ultimately pension funds. And in the early 2000s, we were really looking at how we could mobilize some of the deepest pools of capital into the sustainability space. So really ESG stemmed from that. And the way it developed was we were looking to, we conceived, and then over 3 years from 2003 to 2006, built a set of principles, which are now known as the UN supported Principles for Responsible Investment, which Kofi Annan, the former and late United Nations Secretary General, launched at the New York Stock Exchange just 16 years ago, last week, actually, on April the 27th. And in the build up to that, we had acronyms like SRI, Socially Responsible Investment, and CSR, Corporate Social Responsibility. But we felt we needed something different based in the minds of finance and investment. And so we started doing the research towards that. And ESG really grew out of that process. But coming to the quick, we got to the point in May 2004 in my office in Geneva, and we had to decide on, is it going to be ESG or GSE or GES? Naturally, it should have been governance, environmental, and social. But we felt we need something a little bit more zippy than that. Environment is sexy. Governance, business knows it, so we can put that on the end. But the most difficult thing for the investment community and business itself, we feel, is the social components, the social challenges. And that often gets forgotten or knocked off the end. So we wedged it, we welded it into the middle, and that was it, ESG. And I must say, I had a brilliant team around me, but my instincts as a UK tabloid reporter from the 1980s persuaded me that ESG, as easy as 1, 2, 3, ABC, was sexier. And, we're surprised where it's ended up today. And that set of principles Kofi Annan launched is now, it's got a staff of 120 in London. It's called the PRI, the UN-backed PRI, and it's now 5,300 institutions with a nominal $120 trillion of assets backing it. So that's the origins of ESG.
That is so exciting. And I bet you're thrilled to see the surge and what it has become. I mean, it is common language now for people to use that acronym.
Yeah, look, I think it's quite remarkable. And I think it sort of verified our decision or our idea to bury something in the investment chain focused on initially asset owners, so pension funds, insurance reserves. It's those deep pools of capital that send signals along the investment chain through finance into corporations. Some people say, it's taken a long time. It's been 16 years. But I think it's been a remarkable achievement and much greater than we ever thought. Yes, there's controversy. There's questions about ESG. But look, the risks are not going to go away. We have systemic, we have strategic and operational risks. We see the state of the planet, climate, biodiversity, and these affect business. So we're delighted that we managed to weld financial materiality, fiduciary duties with environmental, social, and governance, and that it's stuck. And our fundamental objective back in the early 2000s was to simply change the conversation. We didn't believe that we would end up where we are now, with ESG being referenced by the Securities Exchange Commission, IOSCO, the regulators, all the different prudential oversight bodies, the Bank for International Settlements, the Basel Commission on Banking Supervision. That's now driving it into the financial architecture. Look, it doesn't matter what way you do the letters, the risks are there, they're real, and business is waking up to that. It's not just about dealing with singular issues. My feeling is that the nature of risk is changing on a warming planet, on a warming, crowded planet. Risk is morphing, and that's what business has to respond to understand how those risks impact their business. But more importantly, we always saw ESG as a two-sided coin. It wasn't just about risks. If you understand the risks, you then begin to understand the new opportunities, the new industries, the space for new products and services, whether it's clean energy, regenerative agriculture, new ways of mining, all of those things. So understand the risk, understand the future opportunities that will make your business thrive and survive and contribute to a better planet, better society.
So that leads me directly to my next question. Given this surge in all things ESG, what do you think businesses are getting right? And then, of course, the other side of that question is, how are we totally missing the boat?
Look, I think there's a lot of white noise around ESG. There's a lot of complication. I sort of normally frame it as a metaphor that we're at the Klondike, the Wild West, the gold rush phase of ESG, which makes it difficult for businesses. And again, I mean, to push that reference, we're in that phase of the Klondike where it's the bucket sellers and the spade sellers and the bar owners who are making the money. And what businesses have to do is they have, whether publicly or private, a board working with its general counsel and senior management team. They know their sector and they know the main risks in their sector. Businesses have to forcefully take a step forward to prioritize what ESG risks and issues they're going to deal with. You cannot deal with the entire panoply of drop-down menus that we see in terms of the different raters and all of those things. You've got to have the confidence as a business, as the chair of a business and as the general counsel, to say, right, this is our industry. These are the risks. What do we prioritize? Let's simplify. Let's drive that through the culture. Let's take it from the board down, but let's also work it from the base of the business up. And we've also got to be bold and brave as a board. We've got to defend that narrative, because people may attack us for a whole overwhelming range of issues that are related to ESG. But our conviction as a board is that we've prioritized. This is what we're dealing with. This is how we're doing it. So I think simplify, simplify, simplify. Prioritize. Understand what really is essential to your business in terms of the broad ESG piece, and stick with it.
I think that's so true, because ESG is so amorphous. It's so big that I think sometimes that's what businesses struggle with. And if they just focus on the things that are most meaningful and material to them, and to your point, stick with it and have convictions, it makes all those other decisions so much easier.
I mean, Pamela, you know him well, Judge Professor Mervyn King out of South Africa, but he captures in such an articulation. He says that, the mind of the board, the collective mind of the board, is a strange thing. And again, I've had conversations where he makes exactly that point. You don't have to consider every single thing. The board needs to prioritize and understand why they're dealing with those risks or why they're looking at new opportunities. They need to discuss the appropriate risk, and really capitalism at the very heart of it. And, I know we'll come to the politicization of ESG in a little while, but, you've got to, as a business or investor, be able to ask that simple question. Is this a risk to my business? Yes or no? If it's not, okay, move on. If it is, how do we deal with it? If we decide it's a risk and we don't deal with it, what does that mean for our collective fiduciary duties as a board? And what does that mean for the business? So you don't have to deal with every single thing under the rocks. It is that prioritization process, and that's about stewardship of a board. It's about a board asking the right governance questions of itself. It's a board making ethical decisions about the business. Now, we always say ESG is about materiality, but buried in the board itself is that consciousness that to manage themselves effectively as a from a stewardship and governance standpoint, they have to do things correctly. So it's a combination of board governance, ESG prioritization, own it, and be prepared to tell the narrative and defend the narrative. That's strong ESG in my mind.
I agree. And you talked earlier about how many years it's been since the ESG moniker was first developed. And clearly your work in this space has continued throughout that time. Most recently, you've taken a position at Mishcon Purpose. Tell me about that and tell me about the goals and objectives.
For sure. Mishcon Reya is an independent London-based law firm with 1,600 staff and offices in Singapore and Hong Kong, and associate relationships around the world with more than 260 other law firms. And Mishcon Purpose is effectively the sustainability arm of Mishcon Reya. So we've been going now a couple of years. I joined last August, in August 2023. So my role there is to help define the business, and the business is split in two. There's obviously the litigation side of sustainability and climate and human rights issues, and we're also building at Mishcon an advisory side to work with boards and to work with senior management of companies across different sectors to help them understand the policy and the regulatory and the increasingly hard-edge compliance and disclosure requirements of ESG. So both looking at it strategically, but also operationally and in terms of transactions. As an example, what we're seeing in real estate is, a lot of real estate contracts and real estate financing are beginning to build in climate-related or biodiversity-related covenants and factors. So that really is territory for lawyers in terms of understanding how the repapering of a sector, that's the new forms of contract, the new forms of regulation, how you deal with that in an ESG area. That's what the business looks to do. We also, I would say, look to provide thought leadership in certain areas. So at the moment, we're looking at green hydrogen. We're also going to look at strategic critical minerals, and that's very much to have real conversations and ask disruptive questions. We're very much at the heart of working with other law firms. For instance, within the Sustainable Markets Initiative at Cambridge, there is a legal group. There's a thing called the Green Legal Pledge, which is the ability of law firms to actually manage the way they enact legal processes, so they're climate friendly and all of those things. So we're right at the heart of what is I think the legal industry has actually come late to ESG, and Mishcon have been very forward looking in setting up the business. And from a pure business standpoint, we're getting demand coming down the investment chain, whether it's investee corporations or whether it's financial institutions, and there's a business building. But that's what I do. So I help Mishcon shape and frame the business and take it to the market.
And you've touched on this, so I'm going to ask you a deeper question about it. What role should the legal profession be playing in, and I'm going to show you my bias here, in leading on ESG for their clients and for addressing some of the challenges facing society?
Look, I think there's a very healthy discussion going on in the legal community internationally, and that's lawyers typically react to the demands of their clients or the issues that they have to deal with. In the context of climate change, ecosystems destruction, the undermining of natural wealth, all of those things, it goes back to the point that the nature of risk is changing. When you have a changing climate and you have resource questions asked, when you have food security, energy insecurity, I think there is a period, and I know there are some very senior lawyers, both operating lawyers and academic lawyers, who agree with me that there's maybe a time for lawyers to become active on the field, to actually call out the fact that risk is changing and that we need new models to deal with that, whether it's from the investment side or business side, or it's in terms of communities. And I think we are naturally beginning to see that happen. The systemic risks are so manifest, particularly from climate, but also the geopolitical volatility we're seeing, all of these different aspects. I sometimes ask the question when I'm speaking or presenting, what would a 23-year-old think? They were born in 2000, and over 23 years, they've seen sort of behind the rolling monster of climate, they've seen pandemics, they've seen financial crashes, they've seen sort of political volatility. We're living in an era, I see it as the transition from extractive capitalism to regenerative capitalism. There's no guarantee that we'll get to regenerative capitalism, but we are in the eye of the storm, right? And we're going to see change and volatility come thick and fast. And on that basis, I think there's no one better than lawyers to deal with risk and uncertainty and help clients through it. And on that basis, lawyers should be more active, and they should be active on the field of play, not just reactive. And I think we're definitely seeing some really interesting movements across the industry, but it did come late to ESG and sustainability. And I think it's playing catch up.
Yeah, I agree. And to your point earlier about we'll get to the politicization of ESG. Tell me what your thoughts are with respect to where this is going. And clearly, it is much more strident here in the US. There's been recent laws passed that in some states that basically say you can't consider ESG factors when making investment decisions, et cetera. Where is this leading us, and how is it going to come to a conclusion?
Look, I'd split it in two. First of all, in terms of the politicization of ESG, and particularly in North America and the US, I find it incredible that 5 Republican senators would write to the top 50 law firms or 50 law firms in the US, the heads of, telling them that they must not get involved in climate schemes or ESG projects. And that's politicians telling lawyers about how and what risks they should deal with, right? Now, look, maybe I'm being a bit flippant, but that takes me back. It's almost central planning. Once you get politicians telling people what risks they should and should not deal with, so I think that politicization process is, I think it also goes to the fundamentals of the way business operates. As I said before, if an investor or a business in a changing policy context, whether it's around climate or it's around pollution issues, health issues, any of those things, every business has got to be able to judge for itself what the risks are, and their lawyers should be equipped to help them work through those issues. So I understand why there is a politicization of ESG and of sustainability, and that it's woke capitalism. I completely disagree with that. I think it's a denial of the truth. We can see at the systemic, at the strategic and operational levels for business, the real impacts of all of the different aspects of sustainability and a planet under threat are in play. I think what is ignored is it's the optimistic side of ESG, the reward side in terms of, look, with the Inflation Reduction Act, I think the Biden administration has, lit a blue flame on the bottom of the firework to a real transformation in terms of the clean energy sector, with the incentives, with the $1 trillion commitment, and business will react to that, to those incentives, and it's come just in time. So I think it's a really interesting policy development by the Biden administration to incentivize American industry to accelerate their greening and their climate alignment and other aspects as well. And look, it's about rebuilding infrastructure. It's about resilience. It's about huge, massive capital expenditure. So I think once politicians start determining what you can and can't do, that becomes dangerous. I think also for pension funds in terms of their fiduciary duties. We know from the Freshfields report in 2005, recognized by the UK Law Commission in 2011, that as public policy changes around these issues, there is an obligation of fiduciaries to adjust and take these material factors into account. So again, it takes us back to the ESG risk component. So look, I could go on at length, but I'm a bit more relaxed about the backlash on ESG. It doesn't matter about the acronym. It doesn't matter about a range of letters. It matters about businesses dealing with real risks in real time and adjusting and taking them into account. And the relaxed bit is that every time ESG is mentioned as woke capitalism, it's getting free airtime, and it's embedded in the investment chain now. the acronym might disappear, but the issues are not going to, and that's the important thing.
Yeah, I completely agree. And I was trying to think of an analogy of totally discarding certain risks your business is facing and continuing to stay the course as if those risks didn't exist. To me, the analogy is, if I were a horse and buggy whip manufacturer generations ago, but totally disregarded the emergence of the automobile, but just kept doing my business, how long is that going to last? I mean, to me, it's some of these new regulations at the state level are actually violating leaders' fiduciary duties because they're being told not to take into account certain risks that are so obvious. And I think it's eventually going to come back.
I mean,
those businesses.
The economic arguments that fiduciary duty is purely about financial return and maximizing financial return. Everyone flips to Milton Friedman and his statement, the business of business is business, but they always forget that he added, businesses should operate in the context of the law. So when you do see policy changes around climate or pollution or the use of natural resources, those policy changes which are coming and regulation, whether it's through market oversight bodies or for the publicly listed companies, on this planet, there are new risks. They need to be taken into account. So the idea that you just stay purely with the playbook, which is dominated since the 1960s, which is to maximize shareholder return financially and ignore the rest, is fundamentally undermining your business. And it's been exposed. And look, the great American and some of the European economists way back in the 1930s, if you think of Pigou, and if you think of Galbraith, they had nailed the issue of externalities, through the 20s and 30s. They understand and understood the impact of externalities on broader society. We've essentially ignored it for 100 years. That's what we've done. For close to 100 years, we've ignored it. And I understand the reasons why, but, capitalism, if it wants to get to the next stage and become regenerative, it has to change the way it does business. And for politicians to tell business or for politicians to tell investors what risks they manage, I think is fundamentally flawed and will come back to bite those politicians who are doing it.
I think so too. And I also think that it's not mutually exclusive with what Milton Friedman said. No. I think the big difference is time frame, right? It seems like the last 100 years or so, we've been focused on short-term returns to investors rather than long-term. And frankly, some of the decisions that are being made for short-term returns are almost guaranteeing that business is not going to survive long-term. So if the goals and objectives are not different, it's just the time frame that seems to be skewed. And frankly, businesses can't survive in societies that are failing. And we're working our way towards that if we don't take a longer term view.
Yeah, and we can go back all the way back to Adam Smith and The Wealth of Nations. I mean, everybody quotes that, and it's seen as the free market and capitalist Bible. And I'm a card-carrying capitalist myself. I've had my own businesses. I've worked in big businesses. I was not just a UN official. So Adam Smith and The Wealth of Nations, but everybody forgets that actually before The Wealth of Nations, he wrote The Theory of Moral Sentiments, which basically said there had to be that moral component which underpinned a market if a market was to thrive, right? And I think we are now seeing the manifest lessons of 250 years of extractive capitalism, short-term thinking, profit maximization, and we just have to rebalance. And if we can there's nothing more powerful than a good business in terms of good jobs, employing people, being in a community that cares for and looks after, and all those things. And they last and they sustain, and that's what we need to move towards.
So, given that, what gives you hope?
I go back to the reference to the sort of the Klondike era of capitalism, and there's massive amounts of buzz and hype and hysteria of trillions of dollars flowing here and then trillions of dollars flowing out, all of that stuff. What I'm beginning to see is, because of the role of, I think, prudential oversight bodies, because of the role of, and look, pushing this through the investment chain, I think we're beginning to see structure and calm. Over the next 5 years, I think we'll see a more structured approach to sustainability reporting. I think that ESG will itself get more structure, I think, in terms of the data side and understanding what is important and what isn't important for business. I think the mechanisms in and across the markets will become more sophisticated. We're already seeing, greenwash begin to be dealt with. So we're still in a volatile phase, but I think in the next 5 to 10 years, we will understand that these are fundamental foundation blocks of better, cleaner capitalism, which will bring greater rewards to more people on the planet. Because good business and good, well-operating capital markets, there's nothing like that in terms of a mechanism to, flow funds to new good ideas. And that's what brings me hope and optimism, is the fact that, a small band, a very small brand of very young UN officials and consultants back in the early noughties were in a position to plant a very positive virus in the system. And less than 20 years on, it has changed the conversation, and it is changing the way businesses think. And that's right, and that's proper. And yes, it is difficult at the moment, but I think in the next 5-10 years, it will settle. We'll get structure, work of bodies like the ISSB, the International Sustainability Standards Boards, finally trying to bring different standards together. The work of Mark Carney in terms of the Glasgow Financial Alliance for Net Zero, the commitments by companies, which they know they've got to begin to deliver on because they're under the spotlight. All of these things are part of the great transition. It is a time of volatility. It's difficult for business. It's difficult for the legal profession, but it will set us on a pathway to restoring the planet to health, in my opinion, and without get carried away. And also in terms of delivering more for more communities, delivering basic services more effectively, the digitalization, the integration of the convergence of digitalization, mobile money, artificial intelligence, machine learning, brings with it huge capacity to deliver better services to more people in the least developed countries, the middle income countries, and in the pockets of poverty in the G7 and the OECD. So that's what brings me hope. It's a combination of rethinking capitalism, technological development, and an understanding of just how serious some of the problems are now, and people are getting to grips with it. And I'm a great believer in the ability of human beings to innovate and move at speed when they know they're threatened, and we see that happening now. And the legal part, the legal firmament needs to be absolutely at the heart and center of that sustainability change. And that's why, again, Mishcon Purpose, I think, is a very exciting development to have a new arm of a law firm, where the law firm actually changed its trust deeds to project the fact that it had to project social good and be on the right side of the change. So to enable Mishcon Purpose to start. So that's why I'm optimistic.
That's wonderful. And my final question is, if I'm fortunate enough to have you back a year from now to do another podcast, what will have changed in the next 12 months? Or maybe we should say, what do you hope will have changed? And what will we be talking about 12 months from now?
The simplification of the integration of ESG into business operations, and that boards can be led through in a way they do understand the issues, they prioritize, they understand what their responsibilities are in terms of reporting and disclosure, and that they hardwire ESG thinking into the hearts of their business and actually into the hearts of their new offerings to communities and people in the markets. I think we will see more structure, we'll see more understanding, there'll be more education, and some of the buzz hopefully will have calmed down a little bit, so we can just see ESG as a normal part of business. That's what I would hope to see, not necessarily next year, but between now and 2030, I think we're going to see very positive developments, and we really need to, because the state of the planet is not what it should be after 250 years of, energy intensive driven development, and not enough people are benefiting. So we have to change that.
Well, I will definitely invite you back a year from now and we'll test your predictions. Thank you so much for your time today. And I'm sure our audience has learned a lot. Thank you again.
Pamela, it's always a pleasure to be with our Legal ESG and Amity advisors. So don't hesitate to pull me back in a year. Love it. Thank you.
We certainly will. Thank you. Bye-bye.